Oil prices continuing to tumble after US President Trump said Iran and Israel did agree to a ceasefire. To get more, though, on what's moving markets, Tony Sycamore from IG joins me. Some colourful language, Tony, from the president overnight. I mean, it's very much what you'd call a fragile ceasefire here.
Yeah, some heated moments there. But look, the ceasefire held, and that's the most important thing there. And I think President Trump would no doubt be happy to see that. What it's done for equity markets has been a very solid boost higher. The ceasefire, which was announced yesterday, really propelled US equity futures higher, and those gains held overnight and were built on. So, when we look at where the NASDAQ has actually got to, it's just sitting marginally below that record high there. And having come all this way, I think we've said this before, it's very unlikely that it won't break through that record high. It's just a matter of when, and my guess is it's probably tonight. You can see the gap high there. This is the NASDAQ cash we're looking there. We did flag there were some important levels to keep an eye on when we chatted last week, Jules. The 21,500 area was the important level, which would signify a breakdown. It didn't break, and in fact, it's bounced very well from that level there. So upwards and onwards for the NASDAQ there, and I guess it's just a question of how high it does go when it breaks. But just keep that 21,500 level in mind as a safeguard, if you like, against the rally failing.
All right, so then what does it all mean for our market, particularly when you have this big fall coming through in oil and we're so dependent on energy?
Well, the Middle East melancholy lifted big time yesterday, and we saw the ASX 200 finish about 80 points higher there, marginally built on those gains this morning. But the whole decline from that 86.39 high was very orderly, begrudging even. And at the 84.21 low, we had undertaken a 2.5% pullback, and then just like a spring coiling, we've exploded higher yesterday. And I suspect that probably that upward momentum continues pending the CPI data out that comes out here in Australia. But my guess is that we are going to break that 86.39 high. Just the way that the ASX 200 pulled back was certainly a corrective move, and now looking at potentially pushing up towards 8,800.
Okay, well, let's talk more broadly about what we're seeing with oil, because certainly there is a lot of optimism of this ceasefire, and that is seeing that huge spike that you saw in oil really pair off.
Crazy moves in oil, and you come to expect that. It's part and parcel with the oil market. We saw it during COVID. We saw it during the invasion of Ukraine. This is crude oil personified, the volatility which you see here. Now, what comes next for crude oil is the big question, and there's question marks around whether Iran's nuclear program has been set back a couple of months, a couple of years. There's questions being raised about where that 400 kilograms of uranium has got to. And there's also question marks around whether the current regime holds on to power. Now, a vacuum would probably be the worst possible outcome in terms of if there was an uprising to get rid of the regime. So there's still a lot of question marks in my mind. But look, we're back to around that 64, 65 level. That's the level we broke out from a couple of weeks ago. And I suspect that if we can hold that level, we may just trade in a range between, say, $70 and $65. If we were to slip below that $64 low we saw last night, then unfortunately, technically, we're back within the range. And that's not a great sign, because it would mean that we're heading back down towards $60, possibly even a retest of the lows.
What about gold? It kind of seems like maybe we've seen a peak there for now.
Gold's fascinating. Yeah, the safe haven bid, which came into gold on Friday, has just completely disappeared. I took it back to some very important trendline support coming in around 3,300 to 3,290-ish. Overnight, bounced from there a little bit. I think that was due to the easing in the US dollar, which came after some weak economic data there in the US. But very much a case of, while gold holds above 3,290 to 3,300, the uptrend remains in place. But below there, if we do see sustained break below there, then unfortunately gold will take another leg lower down towards 3,120.
Okay, let's talk then about what we're seeing with the Aussie dollar, particularly ahead of the inflation data coming through shortly.
Not a lot's changed for the Aussie dollar. We've been in a range now for 2 months between 65.50. We had a look at the lower end of the range on Monday, but springboarded right out of there. The bottom of the range comes in around 63.50. I still feel like we're in a consolidation pattern from the recovery from the April low, which suggests that the next move will be higher. But when you look at a chart like this and a very well-defined range, you have to respect the ranges, looking to obviously fade the dips into the lower end and fade the rallies up towards the top end. Very much well aware that if those range extremes breaks, you probably need to be prepared to exit and even go with the break. So that's something to keep in mind. But right now, holding a range, and we're waiting for CPI data to give us a bit of a lead on what comes next.
And finally, with Bitcoin, the old Elliott wave you're looking at there.
Look, Jules, this was a piece of textbook Elliott wave coming through there. The decline from the 112,000 low unfolded in 3 waves, which in an Elliott wave sense is the ideal type of correction you'll see, or a common type of correction you'll see, I should say, in markets. Now, it took it back down towards the 200-day moving average, which is a level we've been flagging for a while. While Bitcoin holds above that support between 100,000 and 96,000, given the fact that the decline has been very orderly, very corrective, I've moved to a technically bullish bias on Bitcoin early yesterday morning, and I expect that we will see a break of the 112,000 high before a push up towards $120,000.